the economic solution coming in 2021 and how it can be used. We are heading for a major correction to the market in 2021. We have been in a COVID recession since 2020, but most people did not really feel that it was difficult. It is as if we can see the mushroom cloud in the distance, but the blast wave has not hit us yet, but it is coming. Most people have their banks and homeowners deferred mortgages, rent payments, and more. Some have collected unemployment benefits, others have been released with work from home, and some come into play. Overall, there was a nothing matters feeling for a year, and COVID became the ultimate excuse. I missed a meeting, sorry, COVID. I missed a wedding, I'm sorry, Rona. You missed a payment, sorry, pandemic. You got it. It has helped stimulate unemployment and money, but for me, most Americans have not felt that hard yet. Poor people flex this, and rich people still spend summer in Florida, but the time is not on the side of most people. At least those who get stuck in the rearview mirror for too long. This year, when I looked at investment property in Brooklyn, I saw at least 2 apartments where whiteboard expenses were planned. The track was only a few months. The truth is almost here. I'm not trained economist, but you do not really have to be somebody to see the signs of a major collapse that will happen to all of us. I will sum these up in a minute. These are not mountains. Okay, back to the economy. Economies are emotional. Economists of the past did not see this, and therefore their financial models were flawed. Behavioral economics has proven that markets move with emotion, and the American market is close to a tantrum. So we can admit that the markets are emotionally charged, but there are other factors at play. One such factor is demonstrated in GameStop's case study. This has proven that there are greater forces that routinely manipulate financial markets for personal gain. Some are bad actors, others only act legally and with personal interest. We all act in our own interests. We are biologically connected in this way. Rona, stop. I am an unrepentant capitalist. If there is a Legend of Zelda code, and if it is legal, that opens ways to make money easily, go destroy yourself. There are a lot of cheat codes out there, always been there. Early Bitcoin was one. 5 years ago, so was Facebook advertising. Those who know how to create profitable and scalable ad campaigns made millions, maybe billions. This environment has changed, as environments have always done. Here are some signs, and signs that tell us that we are approaching the edge of the cliff dangerously. Market circularity. Markets rise and fall. We have been fine for a long time. Inverse yield curve. As CNBC put it succinctly, amid falling interest rates in the wider US bond market, the yield on the benchmark 10-year Treasury bill has fallen several times below the 2-year yield since August 14. In a healthy market, long-term bonds carry a higher interest rate than short-term bonds. When short-term bonds yield higher returns, this is called yield curve reversal. The bond market phenomena is historically a reliable sign of the eventual recession. The last 7 have preceded the recession. Gross domestic product. GDP growth is slowing. It is the slowest it has been since 2018. US manufacturing, lowest it has been in 10 years. Business spending, lowest it has been in 10 years. Companies are saving up for a rainy day. Unemployment, we are close to a 50-year low. This is my personal favorite indicator that I just made up. GameStop, Bitcoin, politics, COVID, riots, liberals buying guns, and uncertainty. But how can we benefit from and in such an environment? The first step is to start preparing. What am I personally doing? I pulled out of the stock market a year ago, right before COVID. Maybe it was early, but better early than late. If you have the cash, there is going to be a lot of bargains out there. Wealth builders. I'm focusing on trying to buy another business and acquire United States and foreign real estate investments. I sold a business, Crate Club, that was struggling from growing too fast. It is in better hands now, and I can focus on soft-rep media, which is high margin, asset light, and offers a great community. I bought an investment property, and I am looking for more. I sold what I did not need, my watch collection. I started stockpiling liquidity, aka cash, to buy more real estate and a distressed business. Why am I looking offshore at real estate? It is part lifestyle, part hedging against a depreciating dollar, and part asset protection. America is a happy place, unfortunately. Trip and fall. And it is the restaurant's fault. They have insurance. You should sue them, exclaims an army of contingency. Ambulance chases. Lawyers. It is a shame, but it is what it is. Therefore, I like the idea of holding some assets offshore. This year will be one to reinvent and take ground. Recessions produce massive opportunities for the person who is willing to plan and, more importantly, execute. Most people just do not execute. They just plan, and plan some more. The biggest thing I am trying to accomplish in 2021 is to lower my personal carry to zero. Most people raise their expenses along with their increased wages, bigger paycheck, bigger house, and a fancy car. Yet, a higher income and lower expenses is my aim. In addition, many GOP lawmakers have expressed their opposition to the amount of incentive controls and have suggested reducing the amount to below $1,400 and reducing the scope of those to whom they were sent. Republicans also condemned the package for its potential impact on the United States debt. Our national debt is greater than the size of our entire economy for the first time since World War II. Kentucky United States Senate Republican leader Mitch McConnell said to the Senate on February 4th, "We have placed some more debt on our grandchildren for policies that even liberal economists say were not adequately targeted to current needs." Many economists have expressed their preference for economic relief for unemployed Americans over their overt worries during an emergency. In terms of pushing the economy through pre-pandemic levels, this will certainly help achieve this faster than anticipated. The downside risk, however, is that it renews concerns about government debt that soared quite rapidly last year. This is a longer period. The period concerned 2020 was all about managing downside risk and how bad it will get. I would rather go on the opposite side and mine. That's what I'm looking at in 2021. How much are we going to save? Seeing a huge figure like this, $1.9 trillion, makes someone a little more optimistic over the next 11 months. If you make any investment or legal decision, it is advised to consult an expert before making this decision.